I think you can very conservatively. I mean, I was calling for 100. You could see, I like the way it's progressing. It kind of moves up and then it builds a nice big base and flag, and then it moves up again and builds, so we're at 58 and then we went to 70 and then we went to 100. And I think the next move is going to take us to 130 or something. And where's the top on the cycle? I don't know. Looking at last cycles, I mean, I would guess, I think 200 is just kind of easy. It feels to me like we will get there, no question. Does it go a lot beyond that? It could. I mean, at how many standard deviations above, the 200-day moving average can it go, right? I mean, and obviously at any point in time, different political events could shove it much higher. I mean, I think if the big print comes along, which is, we'll talk about that later.
Legendary investment manager Larry Lepard is a fierce advocate for Bitcoin and sound money principles. And in this video, he breaks down how the Fed's relentless money printing is fueling inflation and eroding your wealth. Don't miss this. Imagine waking up and realizing that your money buys half of what it did just a few years ago. Gas prices, through the roof. Rent, insane. Groceries, forget about it. But here's the real kicker. It's not by accident. It's the Fed's money printer at work. And guess what? Trump just signaled he wants to lower interest rates again, which means more easy money, more inflation, and more financial pain for the average person. When the Fed prints trillions, it's like flooding the economy with monopoly money. The result? Everything costs more. Just look at housing. Cheap loans in 2020 made home prices explode, pushing millions out of the market. Every time they print more, your dollars buy less. In 2020, $50 filled your grocery cart. In 2023, you're lucky if it covers eggs, milk, and bread. This is what's called stealth theft. Inflation is robbing you without you even noticing. To fight inflation, the Fed raised interest rates. But that made credit cards, mortgages, and loans crazy expensive. Americans are drowning in debt while Wall Street thrives. Weaker dollars mean higher oil prices, and that means higher gas prices. In 2020, $2 a gallon. By 2022, over $5. Everything you buy, food, Amazon deliveries, travel, costs more. The rich get richer at the expense of the poor. Here's the dirty secret. Printed money flows into stocks, real estate, and assets, making the rich richer while workers struggle to keep up. The gap, bigger than ever. But there's a glimmer of hope on the horizon. President Donald Trump, for example, has hinted at lowering interest rates to pump liquidity back into the economy. He promises to bring interest rates down to 2.5 to 3%.
We're going to bring things and you're going to buy that house and you're going to pay 2.5%, 3% interest, and you're going to say, I love this guy.
On paper, this should boost growth, but in reality, it could just add more fuel to the inflation fire. More liquidity means even more money flowing into the system. This is great for Bitcoin, but terrible for your savings. Now here's where Bitcoin comes in. With inflation eating away at your savings and the Fed's actions making everything worse, people are turning to Bitcoin as a hedge against the storm. Why? Because Bitcoin is finite. There's only 21 million of them, and its value isn't controlled by central banks printing money. Bitcoin's the perfect safeguard. It's your safe haven from a dollar that's losing value by the day. Imagine protecting your wealth from inflation with an asset that isn't at the mercy of politicians or central bankers. That's what Bitcoin offers, and why now, more than ever, it's crucial to understand its power in these volatile times. Before we dive into more clips from Larry's interview, take a second to like this video, share it with friends and family, and if you haven't yet, hit that subscribe button so we can keep bringing you the latest crypto updates. Thanks for your support, and enjoy the video.
But for those of us who are in Bitcoin and who have kind of a hodl philosophy and have had it for years and years, it doesn't really matter, right? I mean, if we, I'm quite convinced these coins are going to $1 million and then someday $10 million, very much like Saylor says. And, whether it happens in 3 years or 6 years, it's the same place. And we have long time preference. We can wait. So we'll get there. Slowly but surely. I mean, people are coming around. I mean, kind of the kingpin of that is, look at a guy like Larry Fink who runs, BlackRock, which is the biggest asset manager in the world. And, he hated Bitcoin. We used to talk down on Bitcoin. Now he says it's digital gold. I mean, he got it. He did the work and he came to the conclusion, oh, this is going to happen. I better either decide I'm going to be with it and be a winner or be against it and not win. And so he made the right choice. And I think that's every TradFi guy is going to face that decision, as it continues to go up. And some will be dragged kicking and screaming into it. And as we all say, you get Bitcoin at the price you deserve. But you're right. There've been a ton of really great things since you and I last spoke. I mean, probably the biggest was the ETF, right? I wasn't sure that was going to happen. When that happened, that was just like, oh my God. And, it's been the biggest, fastest growing ETF category ever. I mean, the gold ETF, I remember when it came out in the 2000s, it was a big deal. It took gold from 250 to 1900 over the space of a bunch of years. But if you look at the growth in size, this ETF far exceeds the growth in the size of the gold ETF in the same time frame. Obviously, the election of Trump and a more crypto and Bitcoin friendly administration is a big deal, huge deal. I mean, choke point's going to go away. Elizabeth Warren, you put her back in her cage. So that's a huge deal. And then, as you point out, the SAB 121 thing, I mean, that's big too. I mean, obviously, I think there was a video yesterday on Twitter about Brian Armstrong, as the CEO of Bank of America, talking about how, banks will be offering Bitcoin products. So look, it's clear that the trend is there, the trend is accelerating. And that's always been the major thing that I've focused the most on. I mean, early on, I focused on technology. I was afraid, is this thing going to blow up? Back in 2013, 14, when I was first playing around with it, buying it. But now that one's gone down in my mind in terms of risks. But, the one risk I've always been aware of is just, do people lose interest in this? It's like, yeah, it's kind of a fad. We don't need this. But I just don't see any evidence of that. In fact, I see the opposite. More and more people are slowly but surely becoming aware of it.
Back in the 1970s, inflation was a beast devouring people's wealth, and Larry Lepard lived through it. He watched firsthand as bad monetary policies wreaked havoc on savings and purchasing power. But something else was brewing in the background: technology. The rise of microprocessors back then laid the foundation for today's tech-driven world. Fast forward to now, and Larry sees history repeating itself, but with a crucial difference. Just as microprocessors revolutionized computing, Bitcoin is revolutionizing money. He believes that technology has once again presented humanity with a game-changing innovation, this time in the form of sound money. To Larry, Bitcoin isn't just an asset, it's the inevitable evolution of finance, a level playing field for everyone, free from manipulation. The same way technology disrupted industries and birthed trillion-dollar companies, it's now fixing money itself. The fiat system, riddled with inflation and central control, is being challenged by a decentralized, incorruptible alternative. And here's the kicker. This shift isn't just theoretical. It's happening in real time. Bitcoin is emerging as the backbone of a sound global monetary system, giving financial power back to the people. So what deeper insights does Larry have on this? Let's dive in.
The internet is breaking down the big power structures, allowing guys like you and Rogan and others to, disintermediate the big, news organizations who basically were propaganda outlets. And then, of course, this is, Bitcoin, it's going to do the same thing for money, right? I mean, you had to play within their system, you had to play within their rules, you had to deal with the bank. They charge you 25% to borrow, they give you no interest when you make a deposit. I mean, it's a game that's set up to screw people. And finally, there's a way to opt out. As my friend Jeff Booth says, I mean, if we all adopted this, we could shut their system down, which, in my view, would be really a good thing. So that technology is what's going to save us. So tons of money. We'll get to the total available market in a minute. There's tons of money ready to come in. And you're correct. Most of traditional finance has not figured it out. And I know some part of Bitcoin Twitter. I mean, look, I get that an ETF is not owning Bitcoin. You don't own those keys. And, if the government goes to all those ETFs and says, give us those coins, cash everybody out with dollars, you're screwed. And we have a historical precedent for that because Roosevelt did it in 33. So 34, 33, he revalued gold. But the TradFi guys they're just going to be dragged. Some of them are going to be dragged kicking and screaming, but their business is to get returns for their investors. I mean, that is their business. And, full stop. I mean, risk adjusted, Sharpe ratio, whatever you want to use, whatever metrics you want to use. And so there's this chapter in this book that compares Bitcoin to all the other. I mean, Bitcoin is just crushing every other alternative investment. So if you're in the investment management business and you're not aware of Bitcoin, considering Bitcoin, saying, hey, maybe you should have a little allocation to it. I mean, look, I understand why people are concerned and afraid about it. In fact, there's a chapter in the book called Skepticism that talks about all the FUD that people have thrown up, and I've tried to swat those things away. TradFi, it's, they're going to be forced. I mean, when when you are performing so much better just by having a little bit of Bitcoin in your portfolio than the person who just owns the S&P and doesn't have the Bitcoin, you know, that's their job. Their job is to get good performance for their clients. You know? And so, I mean, you know, at some point they're going to slowly but surely all be forced to wake up and recognize that they're not doing their job if they don't allocate something into this asset. You know, $2 trillion of Bitcoin, okay, today's market value, and $900 trillion of, you know, kind of what we would consider investment assets. Half of that's roughly real estate. So some people view that as investment assets, some people view it as a home, but whatever, even if it's only 450 trillion, the numbers are still compelling. But, you know, all those other assets are, you know, it's cash, bonds, stock, artwork, you know, all the other things that people invest their money into. And of course, probably the biggest one is the bond market. The second biggest one is the stock market. Cash is another good substitute. And, you know, 2 trillion on 900, that means 0.2% of the world's assets are in Bitcoin right now. 0.2%, okay? So Bitcoin could go up 10x. Bitcoin could go from 0.2% to 2% of the world's assets. And it would still, you know, it would still represent a small fraction. I mean, you know, the amount of gold in the world, there's $18 trillion worth of gold in the world. So Bitcoin's got to go up 9x to, you know, to beat gold. And, you know, to me, it's just obvious that it's going to happen unless something in the trends that I'm looking at changes. And that's always possible. I mean, you never say never in the investment business because, you know, you can believe something and be totally wrong. But, you know, it doesn't, I mean, I don't see anything to indicate that that's likely to happen. So, gosh, you know, and I think 2% is just a starting point. I mean, if this really is a sounder form of money than anything else out there, it will become, you know, the go-to long-term saving asset.
That's a wrap. If you found this eye-opening, don't keep it to yourself. Hit that like button, drop a comment below, and share this video with friends and family who need to hear the truth about inflation. And if you haven't already, subscribe so you never miss a crypto update. Thanks for watching, and we'll see you in the next one.